Hope you all having an awesome weekend. So this weekend video is going to be really important because I'm going to talk about very important aspect in today's video. And if I sound a bit low, please excuse my voice because I'm not feeling great. I'm still recovering but feeling much better. And also before I continue, if you haven't signed up with my upcoming webinar which INFX is conducting with me, and I'll be live there to answer your questions, and you will learn a lot about market knowledge, and that will be a private webinar. It won't be public, so make sure you join that, and you also get tons of benefit in the webinar. Link is in the description. Click on the link, fill up your details, and in the message just type I am interested. I'm going to add you right away. Sign-ups will be closing on 24th October in next 3 days. So like I said, in this weekend's video, I'm going to talk something really important because I've seen so many traders, they have blown up their account, especially in the gold market in the last couple of days. I've been reading the comments, I've been watching the other videos on YouTube. They have blown up their accounts, and that is what I'm going to talk about in this video, looking at bullish momentum, especially here. And if you look here, right here, I've seen lots of traders, they have blown up their account as well. These are the two areas where we had most account blown up. Now that's what I'm going to talk about in today's video. How to avoid it and how to understand your trading in most efficient manner. So tell me something. You can see a naked chart right in front of you, no zones, nothing. You are just starting out in forex, or you are trading commodities, whatever. You are starting out, you have heard from someone else that you can make a lot of money in the financial market. All you need to do is just click buy or sell button, look at the overbought, oversold situations, and once the price is overbought, all you need to do is just sell it, and when the price is oversold, all you need to do is just buy the market. Now that can work few times, and that is how the newbies, they come in the market, they make some money, and then they think that it is very easy to make money in trading. But in reality, trust me, it is your hard-earned money, and that can really cause you depression if you keep on losing your hard-earned money. So right here, you see a naked chart. All you do, just try to sell here, try to buy here. You can do it 1 or 2, 3 times, and then in the end, you will lose everything which you made. I'm going to show you some good examples how the trader thinks and how the things can go wrong and you can lose everything. Now, if you see something here, what do you see at this point? You see a nice chart, right? You see a zones in front of you. You know that these are the zones from where you can get a potential selling, or from where you can get a potential buying entries. So that's what you call an observation and preparing yourself for the markets, because now you have your zones, you have your rule set, and all need to look at the conditions. Before that, your patience is very important. When the price is pushing lower in between the zones, you don't want to capture the reversals. The reversals are an area from where we need to enter, and our goal is to enter with the big whales out there, because they have their order set at the area of value, which I call a demand zone. Right here, if you ride along with them, then you can make money. If you go against them, then trust me, they will crush you easily. So that is what we need to identify, these major area of value. Now I want to show you a very good example here when the most of the traders, they blow up their account, they lose money, and I'm going to show you one example of that first, and then I'm going to show you another example as well. And that is what I exactly do when I started out in trading. I do exactly the same mistakes, and that is what I don't want you guys to do, the same mistake. Right here, we have the zones set, we have the rules set there, and all we need to see the price to push down in the area of value. Now I want to show you in the replay mode so that it will make more sense to you. So right here, so we're going to think like a newbie, a trader that is just starting out, or even if you are, or even if you know trading, even then you can make mistakes if you don't follow your rules. Now the price is pushing lower, right? This is a zone from where we had a recent push up, a massive push up, and then the price is about to come back in the recent level. Now we are prepared to take our buy or reversal trades and make money from here, which is likely, which is totally fine if you think like that. When the price is pushing lower, the first thing comes in your mind is the price is now in the oversold situation in the RSI. Now, if you don't know trading, you might be start buying here. And why is that? Even though if you have your zones set. Now, why are you going to start buying here? Someone, maybe your friend, or maybe you might have seen some video on YouTube. Some chap is saying that, yeah, price is now oversold and price can likely push higher from here. And if you listen to someone out there, your friend come to you and say, oh yeah, it's a very good buying point, we have a very nice 1 2 3 4 5 6 7 red candles, now we're going to definitely make some money, we're going to take some money to quick scalp, and then we're going to come out of the trade. Now what happened is price is now oversold, you start buying it. Now imagine if I play the price is pushing lower, right? So consecutive 3 to 4 red candles. Now these 4 candles, if you count from here, $8 move. Now the traders who want to get quick rich, they're not going to place a mini lot, they're not going to place a micro lot, they're going to place more likely one lot, half lot or maybe even more than that, more than they're allowed to take a risk. So they're going to place a big trade here, and these few candles can blow up their account easily. Let's say you have not blown up your account right here, and you say, okay, let me pump some money in my account and let's save the position because the price is already in the zone. We're going to definitely make some money here and it's going to push up. I will recover my loss, and with that I will make more money by doing that. So what happens after that? Another fall. Now the trader is like, okay, it is now way too much oversold, and now he'll be like, yeah, price is now at the lowest point of the RSI and it's gonna push up, definitely gonna push up from here. And what happens? Another red candle. He pumped more money, and now at this point he'd be like, okay, this is my last money, it is my whole life saving, it is my next month rent bill. What I'm gonna do, I'm gonna pump everything and I'm gonna make 3 times more money, which I'm losing at this point. But this is a very good point, as the price is all-time low. We have an oversold in the RSI on a daily and 4-hour time frame, and what happens? Eventually the price crashes and finally you blow up your account. And what is the results of that? The results are, you might have pumped your rent money, or you might have pumped your, let's say, school money or your grocery money. Now it will badly affect your family life, it will badly affect your mental health. That is what we need to avoid, because initially we were prepared to enter our trade looking at a nice technical factor, a zone that price pushes higher. We want to do exactly the same here, but why would you enter your trade when you don't see a signs of a reversal? And what are the signs of reversal? Let's take this example. The price is pushing lower nicely, right, from the level of resistance, and is pushing nicely in a downtrend. All we need to do, ride along with the trend till the price hit the level of the support which we were waiting for to take our trades. Once the price hit my zone right here, this was the trade, by the way, I've already mentioned in my YouTube video as well, we have a hit of the zone. Now after the hit of the zone, would I be saying that, oh, let's start buying because we are in the major area of value? No, I did not do that. We had a hit of the zone, we had a pin bar. Okay, that is a signal that price wants to push up, a good signal but a weak signal. But I want to get a better entry, which is, let's say, a bullish engulfer in this zone, or a double bottom, which is a less aggressive entry. So these are my rules set. My rule number 1, price must be in my zone. That's my observation. It is now in my zone. My rule number 2, price must give me some sort of buy signal. Okay, we have a buy signal, but I want to enter in a less aggressive way because it is not a bullish engulfer, it is just a pin bar. That could have played out as well, but I wanted to enter in a nice way, which is my double bottom. What we have, then we had a push up, pull back, we had a nice bullish engulfing with a double bottom. And not only that, if you look here, we have a divergence in the RSI as well, a nice divergence when price is making lower low and RSI is making lower high. So we have an RSI divergence as well. So see how nicely we are doing our analysis. We entered the trade following all the rules. With that was an absolute perfect condition to enter your trade, where we entered right here. But now just entering the trade doesn't mean that you are a profitable trader. You need to set your stop loss in case of dramatic news events like war situation happening. At least you are not going to blow up your account. You're not going to blow up your hard-earned money. If the price pushes lower against my direction, I know that I'm going to come out with a minimum loss. But if you see, you follow all your rules here and the price pushes up massively. So that is how you need to understand the zones and the way you enter the trade. Now that was a good example, and I want to show you a very recent example that happens just last week. Now last week, I've sent these zones to the members. The first zone was right here, and I prepared my members to enter their sell trades if we have a condition. Right here, as you can see on the screens, zone sent on 15th last week. We were prepared to take this trade, a counter trade, if we have a condition here. Now, it is absolutely fine if you enter your trade if you see a condition. I've just shown you an example where the price pushed lower massively. Now we were prepared to take an entry from this zone, looking at the fact we are in the level of trend continuation zone that was recently broken, that would likely act as a level of resistance that can push the price lower. But what do we have after that? We have the price pushes up, hit the zone, we had a little pullback. That is expected most of the time. When the price hit the supply or demand zone, you expect some pullbacks. It doesn't matter if you get a reason to enter or not. If you would have entered here, you could have made some money, but I didn't enter here because for me, the entry would be the condition I've just explained. Bearish engulfers, double top, 382 candles with some sort of divergence or at least 2 to 3 technical factors to enter my trade. But here the price hit my zone. Yes, that is a technical factor number 1. But the technical factor number 2 at least gave me some sort of sell signal. We have no sell signal, right? This is just a doji, a spinning top candle, and then the price pushes up. Now, looking at the fact we are in the war situation, I was not expecting full reversal. I was expecting some pullback that is enough to hit my targets, looking at the uptrend, and then exit my trade and ride along with the trend. So if you see here, I had no sell condition, but we had a push down followed by bullish engulfer. Instead, I have my buy condition. So I've chose to enter my buy trade. But the traders, most of them, what they did, they start selling here. Why is that? They saw the overbought situation. They see the price is in the zone. But are these factors are enough to sell gold? No, we need to see some sort of signal. Are the sellers telling you that we're going to fall, which is a bearish engulfing pattern, means the bears have taken over the buyers? No, we have no condition. When the price was pushing up right here, the newbies, they start selling here, then they start selling here, they start selling here, looking at the fact, oh, now we're going to get a pullback, we're going to come out. And then the things are gone out of your hand. What they did, they pumped the money, they're pumping the money here, they're pumping the money here, keep on pumping the money, and eventually they blow up their account. Or let's say you have invested all your money in the hope that at least you're going to get some reversal, because we are in the overbought situation on all the time frames. If you look here on daily time frame as well, they start pumping the money, but the results are bad. The price pushes higher. Instead, I would be buying only with conditions. If we have conditions, we only start to buy till when? Till the price hit the zone above, which I've sent to the members, right? This was a zone I've sent to the members to take the sell trades. Now, did I enter my sell trade because I got messages from traders? We are overbought on weekly, we are overbought on daily. No, that doesn't give me any sort of confidence that price is going to push lower, because we are overbought in the RSI in weekly and daily. Looking at the fact we are in a nice uptrend, looking at the fact there is a war happening out there, I was only expecting some pullback and then a continuation, which I'm going to talk about in the gold analysis, what to expect from here. So even though if I get a condition here, I would be taking a little scalp according to the ATR and exit my trade with the stop loss there, and then ride along with the trend till the price at the next level of resistance, which I'm going to mention in the analysis part. So if I ask you a question, do you see any sort of bearish engulfing pattern? No, we do not have any sort of bearish engulfing pattern. Then why are we selling at this point? But if you see the recent trade we took right here in the priority group as well, this was a zone I sent to the members to enter the trades, right? Right here, a zone sent on 8th of October, even though I've sent these zones a week before that as well. So we were prepared to take our trades, and I've already mentioned that it is a valid counter trading zone. I'll be looking for possible buy trades on a smaller time frame with the condition, entry condition you learn in trade alerts, because I send the trade alerts according to the entry I personally take, so that you also look at the same conditions. Now, when the price was here, what conditions, what technical factors do you see here? Exactly the same as before. The price hit the zone, right? Now we have a bullish engulfing pattern, right? That is also buyers telling us we had to have taken over the sellers. We have a divergence in the RSI as well. So we have 3 technical factors that is enough for me to enter my trade. If I have 2 technical factors, I still enter my trade. So that was a successful trade, but we did not get any sort of condition to enter of a sell trade. But if you look here previously, right here, as you can see on the screens, this was a trade alert I've sent to the members a couple of months ago. I don't normally send many commodities alert, but I've seen a very good condition to take my trade. What do we have? The price hit my zone, right? We've been waiting and we were prepared to take over trades, and we had a push up, we had a double top pattern, right? We have a confidence number 1, the price is in my area of value, which is my selling zone. Confidence number 2, price form a nice double top pattern followed by a bearish engulfer. Number 3, we have a divergence in the RSI as well. So adding all that, we have a 3 technical factor combining, and as you can see how nicely the price fall from this area and with conditions only. Now if there was no condition here, price could have broke above massively. The buyers will be strong enough to break this level, and what we could do nothing. But if we see a conditions like a seller's taking over, we have a weakening in momentum, which is our RSI divergence, we have a double top pattern, which is rejection from the sellers. All these are the technical factors we need to look when we are trading in the live market with the hard-earned money. So that is what I want to explain you in this video. I hope you got a value, and I hope you understood the importance of this area and not entering your trades blindly. Doesn't matter if the price is overbought, if the price is oversold, it can still push up massively without any corrections. But if you see a condition, there's a likely chance that the price can go in your direction. Even then, you are not 100% sure. You avoid these type of mistakes next time in your trading and not try to overexpose yourself to the risk and taking your trades just because the price is not just overbought, oversold, or we have a cross. Just single factor doesn't make you a profitable trader. You need to see other technical factors as well in the market to understand your trading much efficiently. Before I end the first part of the video, I want to quickly show you the way we enter the trades with conditions without entering blindly. I want to go through that very quickly. As for the zone, I've sent to the members right here last week on 15th of October, and right here the wheat zone was here. We were already prepared to take over trades, and from the area of value which is in red, we already had a good bounce from the support zone which I've sent last week, and as you can see, the price bounced up from the area of value from the support and now hit the level of resistance. And if there was no condition, why the heck would I have entered the trade? Yes, we had a swing high bearish engulfing pattern that engulfs the green candles, that engulfs the buyers that we are going to push down. The 180R target is hit already, but I have chose to enter with a bigger target with my personal choice. So price is pushing lower, and let's see how it goes. Then that is how we enter the trade, looking at the signals. Then we have gone here. I've been sending these zones to the members from last couple of weeks to enter the trade, and I was expecting a likely push down from this red zone, and as you can see, the price pushed lower nicely from the red zone, even though there is no condition for me to enter. That is why I did not enter this trade, but we had a nice reaction from my zone. That would be enough to hit my target if we had a bearish engulfer after the hit of the area of value. Then of course we have net gas. I've already mentioned these zones to my members last week to look for a condition from this big area of value right at the big zone that was sent last week on 15th of October, and from that zone the price is falling down massively, and as you can see, a nice push down from this area that we prepared to take our sell trades. Right here for indices, I've sent this report, and US 30 is right here of 8th of this month. Right here we have the zones to pay attention to take our sell trade, and as you can see, the price broke below, push up, hit the zone, and then we had a good fall out of the zone. We were prepared to take our trades. So that is how you take your trades with the rules. Without rules, you are not trading, you are just gambling. And if you want to do gambling, the casinos are there to gamble. If you want to make money in trading, you need to have the edge over the market, and that are your rules, your strategies, your backtesting to give you confidence, and most importantly, your trading psychology. With that being said, let's start our analysis. Natural gas, gold, silver, crude oil. I'm going to go through one indices, which is NASDAQ 100 as well, starting with natural gas. So what do we have right here? Like I explained in the first part of the video, that if we have conditions, we're going to enter our trade. If there is no condition, we are not entering the trade. Now the price is pushing lower since this area of value has been hit. We had a trade on 1 hour time frame right here. As mentioned in my video, we had a double bottom that hit your target. Now when the price is pushing lower in a downtrend, we had some pullbacks from the zone that is enough to hit your target, and if we have a condition, we go long. If there is no condition, if the zone is broken, we look for the next level and use a zone that is broken as our trend continuation zone that likely push the price lower. So for now, I'm not taking any buy trades. I will use the zone above that has been broken, which is right here. If a number in blue 2.961 goes up to 3.063, I will use this zone to take another sell trade and keep on taking shots until I see a condition enter sell trade. So my rule is only sell below 50 EMA. Now we are also below the zone which has been broken. So we have two confluences. The price is below the zone, the price is broken below 50 EMA. All I want to see a technical signal which is a bearish condition. And what are my bearish conditions? A pullback below 50 EMA. Doesn't matter if the price hit the zone or not. And then I want to see a nice bearish engulfing candle. If I have that, I'll take my sell trade. I will use the ATR for the target, which is right up there, which is quite low at this point as well. So 3 points will be my take profit initially, and then I manage it further 1 ATR, or it's up to you if you want to keep your stop loss above the zone or the EMS, use the EMS as a trailing stop, whatever you want to do. So that's what I'm looking at. I'm looking at pullback with bearish engulfer. Now, if you want to trade on 1 hour time frame, go back on 1 hour time frame, use a fib tool to calculate your pullbacks, something like this, and use 50% retracement right here for your sell limit order. And this is only for the aggressive trader. If you are not an aggressive trader, you don't need to do that. You need to see a condition I've just explained, which is bearish engulfers below 50 EMA or at the zone that has been broken, bearish engulfer. But if you are an aggressive trader, you want to see a hit of 50% retracement, and that is your sell limit order. and your target can be 1.618 retracement stop loss above this pattern. Use 1 ATR for your initial targets and then manage it accordingly. So that is what you need to look at on 1 hour time frame only, not on 4 hour time frame. So these are the conditions I'll be looking at for aggressive and less aggressive way. So not buying net gas as long as we are below the EMAs and below this zone. The next buy will be only if you have a dramatic push up above 50 EMA. In that case, the conditions will be changed and we'll look for buy trades only. For now, just look for sell condition. If I see another good condition for buy, or if you have a change in conditions, I will inform you accordingly. Exactly the same here on this platform. Look for aggressive entry on 1 hour time frame like I've just explained on Oanda, the zone that has been broken. I will use this zone for my sell trades with bearish engulfers if I see a good condition to enter my trade. If there is no condition, I want to see a bearish engulfer below 50 EMA. Whatever I get, I'll take my sell trades only. The zone below is just a minor zone which is 3.004 that goes up 3.927, from where if we have a push down to this zone we can get some push up from here. So have these zones on the charts as well. If we have a push down to the zone, we can expect some bounce with bullish engulfers or double bottom condition on Oanda. If you are trading here, right here, this is the zone, a minor zone from where we can expect some bounces. For now, we are just looking for sell trades only. Here on NEMEX, exactly the same. Look for the condition right here, a very minor zone. If you have a push down to number in blue, or I want to see a pullback above 50 EMA wherever I get with bearish engulfer, or at this zone with bearish engulfer aggressively on 1 hour time frame. I've already mentioned the Fibonacci pullback. Use your Fibonacci tool to take your sell trades, something from the red candle to the zone above, and then manage your trades accordingly. So these are the conditions I'm looking at for net gas. Once we have a condition, I'm going to enter my trades. Next one, we have gold. So as mentioned yesterday that we have no condition here on gold, but I can see we have a pin bar, a 382 candle that is still above the zone. So look at it, we had a nice 382 candle, right? That is a bearish candle and also a reversal signal. So that will be a aggressive entry, and in this type of entry I keep my entry a little bit below the pattern so that if the price pushes lower, it will trigger my order. So we can get some pullbacks to maybe 20 EMA, or if you have a big pullback, we can get a pullback to 50 EMA to get another bounce. We are still in an uptrend, and in an uptrend we can only expect some bounces before the price push up in a trend. Now it is a very aggressive entry, and that has also closed above my zone. So I won't be taking this as an entry. If you are a very aggressive trader, it's totally up to you if you want to enter on this candle. If not, then what I personally want to see, a green and a nice big red candle that must closed back in my zone. If we have that, a green and a big red candle that closed back in my zone, that will be my good reason to enter sell trade. Otherwise, I will only look for buy conditions if we have a push up above this high, then a pullback with a bullish engulfer, or if we have a dramatic push down to 20 EMA, which is very likely. If we have a push down, let's say this entry triggered, we have a push down, I will look for my reason to enter on 20 EMA or above 50 EMA with bullish engulfer and keep on taking longs until I see a good condition to enter my sell trade. And let's say if the price dramatically push up, it will head higher, which is likely, and the zone above from where I want to look for my reversal trades, it is right here, is 2034 that goes up to 2052. This is the zone from where I want to enter my reversal trades with bearish engulfers or my double top conditions. For now, I'm expecting just a pullback looking at the spin bar. After that, I'm expecting another big push up from here. So not looking for reversal, just looking for pullbacks out of gold, and then we're going to ride along with the trends, keep on taking over pullback trades, keep on taking a trade something like this, bullish engulfer, push up, little pullbacks, and then keep on taking longs, and we can get a big pullback from here, and then we can ride along with the trend till we see a condition for reversals. Next one, we have silver. Silver is pushing up slowly, slower than gold, and now heading towards the level of major resistance. So the major resistance, which is right up there, it is not my favorite level. My good level is right up there from where I'm looking at possible reversal, but this is the zone from where we can get some pullbacks. A zone here which is 24.26 goes up to 24.70, from where I'll be looking to enter my sell trade with bearish engulfers or double top condition, just a pullback before the price will continue to push up in a trend. For now, I just want to see a pullback to the zone that has been broken, which is 22.02 goes up to 22.57, followed by bullish engulfing pattern. If that happens, we have a buy signal. Or if we have a bullish engulfer at 50 EMA after a pullback, then I'm going to take another long trade till the price hit the level above in red. So not selling silver, I'm only looking for buying opportunities with a pullback followed by a bullish engulfing pattern. Next one we have crude oil. Now I've already mentioned that if the zone is broken, then we will use this zone as our trend continuation zone to take over long trades, and that has exactly happened. We also got a pullback to my zone. Now I'm only looking at a next candle. If we have a next candle closed as a bullish engulfer, we have a buy signal, and I will take my long trades till the price hit the zone, which is right up there. 93.05 goes up to 95.09, from where I look for my pullbacks that is enough to hit my targets, and I will see if we have a next condition or a change in trend from buy to sell. For now, I'm just looking for buy trades with the next bullish engulfer. If we have that, we're good to go long till this zone, and then we're going to enter our sell trade with bearish engulfers or my double top entry conditions. So keep an eye here, only buying crude oil, not selling till we are above 50 and 20 EMA or until we hit the zone above in red. So the last one we have NASDAQ1 indices I've added in this weekend's video. Price is about to hit the level of major support, which I'm paying attention to take my buy trades. Now the zone here which you need to pay attention to is 14114 goes up to 14385, from where I want to enter my buy trade with conditions like bullish engulfers if you are aggressive trader, or a double bottom if you are not an aggressive trader. Once we have a condition from this zone, I will look for my entries. I'll keep my stop loss below the zone. I'll use 180R for my initial targets, and I'll go long once I see a good condition I've just explained. So this is the zone for my buy trades. For now, I'm just looking for a pullback and keep on taking shots till the price hit my zone below, and take my buy trades once I see a condition in this area in green. And before I end this video, if you're really interested in making money in the financial market, if you really want to learn trading with the exact rules, if you don't want to trade blindly without any sort of confusions, without any sort of ifs and buts, then this is the course, and this is not a sales pitch. It is very little amount of money you can invest in yourself. You are ready to lose all the money in the financial market just with a guessing game, but if you invest a small amount of money on your own self, then you will learn everything that will help you to become profitable trader, which is the course right here, where you will learn the basics of the course, where you will learn the psychology of the trading. I have some lessons here where we learn the forex basics right here. You have the indicators section right here. Then we have a wrap basic section. Then we have an intermediate section. Then you learn everything, full-fledged course. You have a strategy here, another strategy here. Then you have risk management section. And after that, you have intermediate section, wrap-ups. And after that, you have advanced section, where you will learn some good advanced trading, where you will learn how you can mark the zones and how you can learn to enter in the area of value, stops and targets for all type of entry. You will learn the value double bottom, double top rule. Another strategy right here, which is RSI U-turn strategy. Right here, you have another strategy in advanced section, chart pattern, head and shoulder pattern, and commodities, how you can place stops and targets, some basics about commodities. And then you have your trading plan, and then you have a strategy room where I'll be putting some strategies. So the course will not end here. You will keep on receiving some nice profitable strategies after all the backtesting is done. Then you have weekly guide here, where I come and tell you the entries that happened throughout the week, throughout the month, and I show you how your strategy is working perfectly fine. Whatever you're learning in the course, I will show you the exact entries the way you are learning in the course in all the sections, so that you are up to date with the market without any doubts. And with that, of course, if you are joined full MMTA course, your priority group will be free as well, where you get weekly reports as well. Right here, you can download all the reports from here every week that will be updated accordingly. So it is a very little investment if you want to. Right here, that is nothing. I've seen that people are taking courses for around 4 to 5K, and still you are not getting value. But trust me, you will not regret this $725 on your own self. And with that, you also get a standard plan free for whole year if you join the premium plan. But if you just want to get the zones every single week, you want to get these zones and you want to see an alerts that what type of entries I'm personally entering, of course all the zones, so that you are prepared to take your entries throughout the week. So this is something, if you want to get, you can get it on my website, which is moneymarkets.uk. If not, that's totally cool. Make sure you hit the subscribe button so that you get daily content, daily analysis every single day, so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.